Welcome to the Explainer. Today, we're diving into a cryptocurrency that has been absolutely tearing up the charts, Onyxcoin, or XCN. If you've been keeping even half an eye on the crypto markets lately, you've probably noticed some extreme, almost gravity-defying movements from this token. But look, with staggering price swings comes a pretty fierce debate, right? The central question we're tackling today is this. Is Onyxcoin just a dangerous value trap riding on a wave of market hype, or are we looking at a genuinely undervalued gem with some rock-solid tech behind it? We're going to strip away the noise and look strictly at the data, the source material, and the market signals to help you figure that out. Here's our roadmap for today. First, the volatility puzzle. Second, what is Onyx Protocol? Third, tokenomics and utility. Fourth, the Onyx Governance DAO. Fifth, bulls versus bears. And finally, number 6, the future of XCN. Let's get right into it. Part 1, the Onyxcoin volatility puzzle. Let's look at what's actually driving this wild price action. Just wrap your head around this number for a second. 1,200%. Onyxcoin recently had this explosive 30-day rally that literally sent shockwaves through the crypto space. It bounced off its lower support levels with incredible velocity. The sheer momentum here, absolutely undeniable. But hold on, there's a really vital piece of context we need to talk about. Take a look at this 5.4% turnover ratio. What that tells us is trading volume is actually incredibly low relative to the token's total market cap. Basically, XCN has very thin market liquidity. It's kind of like jumping into a really shallow pool. Even a small jump makes a massive splash. For you as an investor, it means even relatively small trades can wildly exaggerate the token's price, moving it drastically up or down. So what actually triggered all that splashing around? Well, let's trace it back. In January, XCN tested a 3-year high resistance level. Then, an April listing on the Upbit exchange sparked an immediate 64% surge as fresh liquidity suddenly rushed in. By May, the token was basically riding the coattails of the broader market, getting lifted by over $532 million in spot Bitcoin ETF inflows. The hype is totally real, for sure, but these macro events are heavily pulling the strings. Moving to part 2, what exactly is the Onyx Protocol? Let's peek under the hood. Okay, you've probably heard of Layer 1 networks like Ethereum and Layer 2s like Arbitrum or Base. Well, Onyx Protocol takes it a step further. It's a Layer 3 blockchain. This is an advanced network built directly on top of those Layer 2s. It still settles all the way down on Ethereum for that ultimate security, but operating up at Layer 3 allows Onyx to hyper-optimize transaction speeds, vastly improve scalability, and drastically cut costs for its users. There's this quote from the source material that I absolutely love. It describes Onyx as a dApp chain factory. That metaphor just hits the nail on the head. It's essentially a highly customizable, on-chain operating environment that lets developers easily spin up and deploy their own exclusive decentralized application chains. We're talking custom chains for DeFi, gaming, or even integrating real-world assets. It's the whole shebang. Which brings us to Section 3. Tokenomics and utility. Let's talk about the XCN token itself. Now, XCN is far from just some speculative asset you trade on a whim. It's the actual economic lifeblood required to run this network. Its utility covers 4 key areas. First, it pays the gas for network fees. Second, it grants you essential voting rights for governance. Third, it gets staked to provide network security. And fourth, it acts as the interoperability bridge, making connections across chains like Base and BSC. And here's the absolute kicker for the tokenomics, the EIP 1559 mechanism. Basically, the Onyx ledger has this built-in deflationary system that permanently burns a portion of the XCN transaction fees. Poof, gone. So as network adoption scales up, this burn systematically chokes the circulating supply, introducing this powerful programmatic scarcity right into the ecosystem. All right, part 4, the Onyx Governance DAO. Let's see how the community actually controls this platform. Enacting any changes to the protocol is no walk in the park. It requires a really rigorous on-chain process. Step 1 is propose, and that requires a hefty minimum of 100 million XCN. Step 2 is vote. You get a strict 3-day window, and you need a 200 million XCN quorum to pass it. Step 3 is the time lock, which is a mandatory 2-day delay just for community review. And then finally, execution. It's a highly transparent, high-stakes system. Now, you might be wondering, what stops some bad actor from just launching a hostile takeover? Well, enter the Guardian wallet. controlled by a trusted security council. This critical failsafe is continuously monitoring the network. It holds the absolute authority to detect and vaporize malicious governance proposals before they ever execute. It protects the protocol without totally killing the decentralized vibe. Section 5. Bulls versus Bears. Let's weigh these wild, conflicting market signals. Right now, XCN is trapped in a classic market tug-of-war. On one side, we've got undeniable spot whale accumulation. I mean, whales recently gobbled up 1.9 billion tokens just ahead of key macro events. But pulling hard in the exact opposite direction are the derivatives markets. Over there, we're seeing surging open interest alongside deeply negative funding rates, which points straight to heavy, skeptical short selling. But check this out. Even with all that heavy shorting, a really critical metric is shifting. The long-to-short ratio has jumped from 0.77 up to 1.17. What does that mean for us? It tells us that a distinct, super confident group of traders is actively placing bets on a sustained upward trajectory, basically betting against the bearish herd. And finally, Section 6, the future of XCN. Let's look at what's coming up on the horizon. The fate of this whole project really hinges on the Onyx V2 roadmap. They are pushing hard for compliance with the U.S. Clarity Act to become a recognized digital commodity token. You combine that kind of regulatory clarity with a gas-free smart wallet and built-in AI agents, actually, those aren't just cool features, they are major milestones designed to drastically boost institutional appeal and drive real-world enterprise adoption. So, the golden question, where do the experts see the price heading? Quick reminder, we are strictly reporting analyst perspectives straight from our source material today. This is absolutely not financial advice. Conservative estimates place XCN reaching somewhere between 4 and 6 cents. Then there's the long-term psychological barrier a lot of folks are eyeing, which is the 10-cent mark. And for the aggressive bulls out there are targets looking as high as 18 cents, representing another immense potential rally. But remember, every single one of these targets hinges entirely on macroeconomic conditions playing nice and flawless execution of that V2 roadmap. Which leaves us at this ultimate crossroads. Will sustained massive whale accumulation completely overpower those bearish derivatives? Or is that super thin liquidity going to act like an anchor and drag the price down? We've given you the tech, the data, and the market signals. The rest is a giant puzzle playing out in real time. So what do you think the market will do next? Thanks so much for joining me on this explainer, and definitely keep your eyes on those charts.